Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, ice raw sugar in New York. The main pattern here since September 2024, so up now for a full year, had been, and I suppose still is after a fashion of sorts, is the breached and seemingly repaired dark blue September to December 24 bear channel. It's currently 1264 to 1684. That has developed into a descending, expanding wedge pattern. However, since February, another pattern, the bright pink late September 24 to mid-January 25 bearish Andrews pitchfork, which I drew 28 weeks ago, seemed to be a better contender in showing the bearish angle of attack. But on this one, 6 weeks ago, we saw prices push up over the bright pink upper time, which is currently at 15 even, and maintain the move above it, despite in real terms falling lower. I asked the following question 5 weeks ago: was this a true break upwards or just a breach higher? The reason I asked this question was because ever since then, and I say this carefully, ever since the breach higher, we have seen prices turn back lower, back down towards the breached upper time, having been capped by the overhead descending mauve medium moving average, and that's currently at 1648, and now running down along the top of the breached pink upper time. Now, there has been the possibility after last week and last week's and the week before touch and go move higher, so we dropped down, touched and moved higher, that we may finally be moving up and away from the pink upper time, or rather, as I see it, the pink upper time is accelerating lower at a faster rate than the market is able to keep up with it. There's also another large pattern complementing the previous one, another bearish pattern. A longer term bright red November 23 to September 24 shallower bearish shift picture, which has even now after so long been pretty good at showing the bearish angle of attack over the longer time frame. On this one we are today, as we have been for most of the last few weeks, around the bright red middle time, currently at 1546. Plus we are for a third week back below the flatlining green short medium moving average. That's currently at 1623. Overall, I suspect something is going to give, and soon, and I am on the watch out for what it will be. Just be aware, last week saw the lowest close since mid-April 2021, something to bear in mind. Hence, looking below the broken pink upper time, we have little by the late June low at 1468, until the congestion zone between 1379 to 1409, containing the December 2020 low at 1409, and the interesting 21st century 61.8% absolute Fibonacci line at 1382. Ice Europe white sugar in London. After all this time, there continues to be three features on this market to keep bearing in mind on this daily chart. First of the three patterns is the obvious and broken, then repaired, and then broken again 6 weeks ago, and now trying to be repaired once more. Purple, late September 24 to mid-February 25, descending expanding wedge pattern, which is currently 460.22, way off the bottom of my daily chart. This pattern had more than the requisite 5+ touches necessary, made back in January this year, and had been severely tested on the top side, especially between late February to mid-April, enough that I would not necessarily classify as a descending wedge pattern after February, though I'm still keeping an eye on extension to the upper trend line and the recent seemingly failed break above it, as well as last week's changeover gapping move lower, as I believe it all to be significant. Next, I also asked you 21 weeks ago too, and I quote, also keep an eye on the bright pink late September 24 to mid-March 25 recently finessed bearish shift pitchfork. This is a very shallow pitchfork, and the more the market moves lower through it, the more I begin to like it. End of quote. Well, since then the market started utilizing the bright pink middle tine of this bearish shift pitch fall, which is currently at 469.60, as an attractor, riding prices lower in a shallow glide until about 17 weeks ago, when we seem to have become caught in the well-highlighted overhead congestion between 489 even to 490.10 and the bright green extension to the April to June 2021 head and shoulders neckline, which is currently at 493.90. We had a single attempt over it that was tapped back down 3 weeks ago by the declining gold long moving average, currently at 500.880, but then held up from below by the seeming support of the February 2020 high zone at 456.70, which is where we have finished last week and started this week. Now, I asked the following question 9 weeks ago, and I quote, "What it seems to come down to now is whether the market has the bullish incentive to push up over the pink middle tine, the purple upper trend line, and the bright green neckline extension right now." End of quote. 3 weeks ago we tried higher and we had enough of a bullish incentive to do that at the start of the week, but not enough to sustain a move higher, only making just the one single close over all the three key resistances before falling away to make that week a weekly key reversal down. I also said 7 weeks ago, and I quote, "There also seems to be no immediate appetite to push too far lower right now," end of quote. And I continued, "It all depends on what happens between where we are now and the February 2020 high at 456.60, because I imagine under that we might well see some fresh sell stop selling emerge," end of quote. Well, prices did push down below the 456.60 level, even closing below it twice consecutively, but they did not manage to find any stop selling, though we do persist in staying below the level right now. The last two sessions have given us the lowest low and low close since August 2021. I also added the following 5 weeks ago, and I quote, "In that it all depends on what neckline extension, as I suspect that despite the overall bearish pressures, we may see a sideways rectangle pattern starting to emerge between about 456.60 level below and the 493 level above," end of quote. This rectangle pattern, originally with the bearish high 3 weeks ago, and now late last week, and this week's breach on the downside, is signaling that the rectangle pattern may be seeing a breakout, possibly lower, with all the potential that has on the downside. Now, the final feature to watch closely here is the potential bow tie formation, made up from the declining short medium moving average, currently 479.60, the green short medium moving average, currently 479.10, and the the mauve medium moving average, currently at 479.60. This hasn't formed as yet, but it's very close to doing so, and it has a small bearish tinge to it. So what does it mean if it does form a bow tie formation of all the moving averages? Well, it depends on the count for the starters. Between 20 to 25 trading days after the crossover, we should start to see a major move, or at least volatility. There is a relationship between the angle of the moving averages going into the bow tie and the ultimate direction, hence why this pattern is important. Watch out for that potential bow tie formation. It's very, very much on the cards. Sugar white premium spread. I said last week, and I quote, "Things seem to be trying to resolve themselves into a pattern," end of quote. And last week they just added to that idea. We had a dark blue uptrend, currently at 119 3/4, that has finally been broken on the downside, as has the green lower tine, currently at 118 3/4, of the mid-November 24 to early June 25 bullish shift pitch walk, which had earlier reinforced this pattern. Both these will now be retired. Then there is the pattern I cautioned about for Q a few weeks ago. It was, as I said last week, and I quote, I have a fear that it is a real fear that the whole February 25 today action may be trying to form a possible diamond pattern. End of quote. Now I continued, and again quote, this would be a large pattern in time, probably from February to November this year, and in height roughly between just under 100 up to 150. It's too early to say if this happening would, but I would urge you to close an eye on such a possibility. To keep an eye on such a possibility. End of quote. Well, that possibility is now a lot closer. So what have we in the way of supports and resistances that may influence the market? Well, apart from the already mentioned supports below, we should still see very much look at the long moving average below, currently at 102 and a quarter, as this interfered and in its own way held up prices earlier this year. Now below this, well, we don't have that much support until the congestion starting at 85 even and stretching down to down to 70 even. Now looking topside, we have the twin pair of 50% Fibonacci lines at 128 and 3/4 and 131 and 1/4 for the July 19 to September 22 move and the August 21 to September 22 move respectively, plus the congestion at 134 and 1/4. However, as I said 5 weeks ago, and I quote, I'm not inclined right now to view these in a favourable light, as they have been breached before quite sharply, despite only once having a weekly close anywhere within them. End of quote. Nevertheless, they are resistances now of a sort, though as you can tell by my tone of voice, they are not that great. It all now depends on how we develop that pattern I mentioned right at the start of this commentary, if we really begin forming that large possible diamond pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.